So Standard Bank preference shares are underwritten by the Standard Bank Group Ltd, and they were listed in July 2004 and paid 2 semi-annual installments of not less than 70% of the prime rate multiplied by their initial subscription price.
Exactly. So they were issued back in the day, and the payouts were based on the basic starting value, but then they were variable as prime interest rates change. So that creates a bit interesting kind of a hybrid thing. This is the one that has the most value in issue, and it's quite interesting. 4.62 billion rands worth of these instruments outstanding in the market currently.
And they presently offer an effective yield of just over 8%. How do they stack up, the Standard Bank prefs, against the other ones out there?
Standard Bank is a very well capitalized, solid institution. We'll, as I say, some of the prefs that are in issue and some we'll talk about, and some that have unfortunately gone bankrupt, has maybe highlighted the quality of the issuer as being more important than less important. I think people got a little bit relaxed, and then we saw African Bank go bankrupt, which was a massive bankruptcy for South Africa. And there you lost up to 100% of your capital, depending what instrument you invested in. So they're not without risk. So the quality of the issuer is important, and Standard Bank, I would say, ranks right up there. They're very well capitalized, fairly conservatively run bank. Interestingly, they had a trading update yesterday, and they've cleaned out house really with that the London side and that bonded warehouse in China, where they seem to be recovering from. So as an issuer, yes, very good. And what we didn't talk about is that the yield that you get is quite tax effective, and it depends who you are, because they were issued when STC was around and there was no dividends tax, as you mentioned, Paul, and the whole regime has changed. So if you're a company, they can give you quite a nice after-tax yield, and if you're an individual, obviously you're going to pay the STC, not the STC, the dividend tax on that.
Paul, you've done a lot of research on this. Anything else to add on Standard Bank?
Look, it's interesting, as Lance says, Standard Bank itself is doing fine in the market, and it's getting through some problems. If you own these, you don't get any benefit of associated distributions or higher dividends or anything. These things have to be paid their distributions before the ordinary dividends are paid by the bank. So in a dire scenario like happened at African Bank, you all go down. That's a concern. But in the likely event that you're holding something issued by Standard Bank, I don't think you have those kind of risks.
So it goes back to the quality of issuer, which was a point that Lance made repeatedly.
Let's have a look at the 5-year chart of these, though. That doesn't really tell you a lot. What that tells you is over the last 5 years, people have generally had the view that interest rates were going to rise. Although I think most people will concede that the wait for interest rates to increase took a little longer than might have been expected.
Why would you opt for a pref over a bond?
These prefs are specific, and they semi-fixed, so there's not nearly as much interest rate risk as a bond. So a bond is issued at a fixed coupon, and the price of a bond can vary dramatically because of that. These, with prime changing, which happens every so often, which is meant to be more in line where interest rates are going, the yield on these changes. So you get compensated if interest rates go up for higher interest rates. But bond, your price will just go down.
Do you want to call it?
I think let's move on. I mean, the interesting thing when you say call it, if you own these already and you bought them specifically because you were going to ignore the price they were reflected at in your account and just look forward to your 6 monthly distributions, then by all means hold them, if you're that kind of investor. However, I would not buy these today. I think you can do a lot better.
Not hot.
Not hot.
Not hot. Lance?
Not hot.
Not hot.